traditionally private equity isn't focused on fundamentally shifting the way that the business works. What I'm talking about is actually building like a technology business and like a technology core. My big idea is romanticizing inorganic growth. And really what that means is I see like the next evolution of private equity being possible where small businesses can leverage technology to basically like automate parts of their services organization and then go and use a better business model to acquire other small businesses.
Obviously, LLMs or AI are kind of the talk of the town, penetrating every industry. But tell me what you're seeing on the ground in terms of how these LLMs are reshaping industries.
Yeah, it's just amazing to see how fast adoption has been across whether it's horizontal applications or vertical applications. And just for this conversation, maybe we'll focus on the vertical.
Yeah.
Obviously, we recently announced our investment in 11x, which is automating like the sales function. And I don't think I've ever really seen demand like what we're seeing for basically automating the role of an SDR. And so you're kind of already seeing it within the sales organization. If you think even on like a more vertical specific basis, I see it in like freight with companies like Happy Robot, basically automating the call center operations around what a freight broker does, whether it's like calling and, booking a load or dealing with a new carrier that a freight broker has to deal with. We see it in healthcare with another one of our portfolio companies, Tenor, which is automating the back office processes associated with a small healthcare practice. And so I think we're seeing a bunch of these applications pop up and frankly have growth rates unlike anything I've ever seen again.
Yeah, and I love those examples because you're touching so many different industries. And maybe if we zoom out just a little bit and think about maybe like a framework for disruption, how do you think about where maybe this could be applied?
The way to kind of just zoom out and think about this opportunity is like, where are there a bunch of humans that are basically dealing with whether it's voice or paper processes, where there's a bunch of unstructured data that they need to basically synthesize and then make sense of and then generate some sort of output. Like obviously that's what LLMs are super good at. And so like the very common way of thinking about that might be like, hey, there's a call center somewhere, right? That's like the healthcare or the insurance example or the sales example. Or maybe you have some sort of, we call it the messy inbox problem here, where there's a bunch of different pieces of paper that are coming in and you need to synthesize them and put them into some database. But oftentimes that's like an internal team. But then also you could look for wherever there might be BPO spend, like business process outsourcing spend, where maybe a consulting firm is doing this for you. So those are kind of the hot buttons. A bit's not Adam's industry, like you're dealing with paper, not physical world things, and something that is conducive to be automated by LLMs.
I have to admit, when I was reading your big idea, I thought, isn't this just kind of like private equity?
Yeah, exactly.
So convince me otherwise. How is this different from traditional private equity?
First, like what is private equity? Like I think that's important to like just talk about. To oversimplify, like private equity is a buyer purchases a company using some combination of equity and debt, traditionally like a good deal of debt, and then basically tries to improve earnings in the relatively short term, right? Normally private equity has like a 3 to 5 year hold period, and then sell it to the next buyer. Private equity firms typically are optimizing for IRR, internal rate of return, and they're less focused on like ultimately like a multiple on money, basically saying like they're not focused on the biggest possible version of the company that they can build. Rather, they're focused on making incremental improvements in this time period, because that's like how they think about liquidity and that's how the model works. The problem with that is it creates like a little bit of a perverse incentive structure where typically they're focused on like one of two ways of making money. First is like the most obvious, like when people hear like private equity, it's like, oh no, people are gonna get fired. But obviously what they're trying to say is, hey, this hasn't been run in the most lean and efficient way maybe it possibly could have. And so, hey, the accounting department doesn't need to be this big, or maybe we can consolidate these two different teams or whatever it might be. That's the first bucket. The second bucket normally is saying, hey, we're going to go acquire other small businesses or large businesses, doesn't matter. We're going to acquire other companies. We're going to use more equity and debt. And we're going to basically buy the next incremental company for a lower multiple, roll it into our company, and have multiple expansion. So these are the two very common ways that private equity firms make money. So I think what's interesting about this model is that it's actually addressing like a third leg of the stool, in my opinion, where traditionally private equity isn't focused on like fundamentally shifting the way that the business works. What I'm talking about is actually building like a technology business and like a technology core to a traditional services company, right? So in the past, like a private equity firm would say, hey, like we don't need that many people in accounting. I'm talking about automating like a large swath of the company. And to do so, you need to have a very different view on returns, and you need to have a very different view on short-term earnings. Because what will end up happening is like, turns out engineers, pretty expensive, right? And it requires like significant investment to get this business to, a more automated state. And so you have to not think about like IRR over the next 2 or 3 years. And instead you need to be thinking about like, what's the largest long-term valuable business that I can build? And how do I invest in that future? So that's like the very different, way of building businesses. There's a couple of examples on the public markets that are a little bit more holdco traditional software versions of this. But one is a very well-known company called Danaher. There's another one called Tyler Technologies based out of Texas. These are like probably the best examples of these businesses historically. But again, they're not AI native, right? And they're basically focused on the first 2 buckets of this, which is like financial engineering and or like operational efficiency.
Got it. Yeah.
Not building in AI to their businesses.
No, that's super interesting. And I think just for the listeners, let's try to be really concrete here and paint a picture of what this could look like, this idea or opportunity of, quote, AI-powered vertical specific service startups.
Yeah.
So tell
That's
me,
a mouthful.
Yeah, I was going to say, it's a lot of S's, but what would that look like? Like, let's try to really paint a picture here.
Okay, so let's imagine that, Steph has an insurance agency in Columbia, Missouri.
Great.
Okay. So let's call it a small insurance agency. You do $3 or $4 million in gross written premium. That generally will mean you do a few $100,000, call it $500,000 in revenue, net revenue. Let's say you have single digit margins on that revenue. So like you're living a nice life in Columbia, Missouri, but like this is a small business.
Yes.
There are thousands, tens of thousands of these businesses across America. You're selling, imagine home, auto, life insurance, and a little bit of commercial insurance. At your Steph's insurance agency, maybe you have 1 or 2 or 3 people in the back office.
Okay.
Maybe there's a CSM that's dealing with like net new business that you're writing. There's someone in the back office that's dealing with all the paperwork, right? Because when you write an insurance policy, it's like, hey, I got to get a bunch of information from the customer. I got to go get the quote from my legacy system, and I got to write all this stuff down, and I got to deal with all these back office processes. It's painful. Basically, that's the reason your margin is so low. And you've tried to fix this, right? You've tried to buy software, but the only software in this industry is really legacy, right? Like there's these 2 big businesses in insurance. You don't really have a great system here. I come to you and I say, hey, Steph, like, wouldn't it be great if I could give you like basically automation that could take all of that paperwork that you've been paying, 5, 10, 15+% of your net margin for, right? And we can automate it. And what does that require? Right? It will require you going and getting deeply integrated from the technology side, deeply integrated into the core systems of record,
right?
Leveraging AI agents to basically have some of those conversations with the customer, whether it's on new business, on renewal, or on client servicing, and then actually resolving these claims in real time, or like resolving these service issues in real time.
Sure.
Now, Steph's insurance agency doesn't need 4 people. It might need 2 people. It might need 1 person.
Yeah.
And you go from having 5% net margins to 30% net margins, and you go and you put a pool in or whatever it might be. Or frankly, what I think is really exciting is you use that extra cash and you buy John's insurance agency down the street.
Right.
And now you see what the opportunity is to run this playbook.
Yeah, because basically what you're saying is that what you put into the technology can be replicated for insert other business here. Tell me a little bit more about why you need to buy the company, though.
Yeah.
Could I not create a tool that just sells into John's insurance company, Steph's insurance company?
You actually made a really good point at the end of what you just said, which is like, hey, this can be applied to the next business.
Yes.
And if you build this software, I think in the right way, in the right industry vertical, once you've built those like core integrations, in the example that we were just doing, it's into like the applied Epic system or whatever core system of records exists across the small business you're thinking about. Those systems are, in many cases in these legacy industry, are pretty ubiquitous. And so you can kind of repurpose this technology across each one of these small businesses. I'm not saying it's going to be simple or easy. It'll require implementation, but that's the opportunity here, is to stay vertical specific and build this like deep kind of understanding of the systems. But it's a great question on like, why not just sell software to these companies?
Yeah.
They just aren't accustomed to running their companies this way. I've gone and I've tried to sell software to a mom and pop insurance agency in Columbia, Missouri. Trying to drive adoption is super tricky. And so in buying the business, instead of like trying to do business development exercises and like convince someone that like, hey, the pot of gold at the end of the rainbow is worth it for you. Instead, we can now say, actually, like, hey, like this is what we're gonna run the business. Operationally, this is our new cadence and our new workflow, and here's how we're gonna get to the next stage.
So you're saying basically in purchasing the business, it gives you the leeway to actually shift things fundamentally, which is really what this is articulating. Maybe another question is just, you seem to think this is a really big opportunity. PE itself is a huge industry. So why do you think this is actually maybe a bigger opportunity than traditional private equity?
So I think that this all comes down to capital efficiency. And so, for example, like, buying one of these small companies that I just described, like, isn't actually like that expensive of an endeavor. And if you can do what I'm talking about, you impact earnings, and all of a sudden, like the first 1, 2, or 3, maybe you don't immediately pay back using cash. But after like the first few of these transactions, you start to throw off cash, and that cash can then be used to acquire more and more of these small businesses. And so there becomes this beautiful like flywheel effect to the acquisitions that you can make, and then that new businesses that you can acquire. And so unlike traditional private equity, where you're constantly raising debt, maybe you need more equity. And again, it's much more financial engineering. Instead, you can actually just compound over a long period of time and build value that way.
Yeah. And I guess what you're getting at is the margin change is so significant where you can do that. But instead, if you're doing some of the financial engineering that traditional PE relies on, you're often not changing the margins from 5% to 30% or to 50%, even in some cases.
Yeah, and I think there's a nuanced point here where if you do this right in the right vertical, and the businesses that you end up acquiring are worth more to you than to any other buyer, like that's when you can start to do really interesting things, right? So like, let's say I'm doing something and Mark is doing something in the same space. And for those insurance businesses, we're both running this same playbook. He's a private equity firm. I'm running a technology business. And I go to you and I say, hey, I have this wonderful technology platform. Wouldn't you like to come and grow with me? And I can take your earnings from 5% to 20% versus Mark says, hey, I'll actually, I'll just pay you a bunch of money. And like, you're going to stay at 5%. And maybe I'm going to fire Susan, who runs your accounting, right? Like whose value prop sounds better?
Yeah.
And so in this way, you can, one, like your business is actually worth more to me, right? Because I can impact earnings in the short term based on my technology. And two, you want to work with me because you see, hey, like I'm not going to like have to go in and fundamentally like do a bunch of these things that are really cutthroat. And it's a growth story.
And speaking of that growth story, it sounds like a lot of the growth is inorganic in this case. At least that's what this story is about. So tell me more about that. Why the inorganic growth strategy versus, maybe a more organic approach?
Yeah, so it's a great question. So I think that the way to think about these like kind of more traditional services businesses, oftentimes they're local enterprises, right? So like, again, like in Columbia, Missouri, you have a reputation as being like a trusted source of insurance services. And so people want to come and work with staff for that reason. And it's actually traditionally pretty hard. It's not just insurance, but like think about real estate, law, they're traditionally local. And so it's pretty hard to go add net new customers and grow organically. If you're doing that, like it's pretty special. In my opinion, the best version of this inorganic, growth strategy, it's like you're acquiring a very sticky, a very local, geo-specific customer base, and then you're improving the business that's serving them and freeing up that person who already has like all of these wonderful connections in whatever space they are to go do more of that. Right? So now you're not focused on like, hey, shoot, I've got to deal with all of this stuff in the back office. I can go to the little league field or the wherever the heck you go to like sell insurance and basically get to know people and do business development. And so now not only are we impacting like earnings, we're actually impacting the net new organic growth rate, which is pretty clever. The way to think about this in my mind, or the way that I think about it, is, hey, if you were running an enterprise software company, right, and you were like in the public markets, and you're saying like, hey, I could have 18, 20, 24-month paybacks on like a great enterprise customer logo, that's the way to think about like these small businesses. Like, can you find a way to have like strong paybacks on these new business acquisitions and treat them much more as just like an enterprise software sales motion rather than a traditional private equity firm acquiring some small business and doing a bunch of financial engineering on it.
But obviously this is not easy.
No.
Right? This is not operationally easy. So tell me more about that. Like,
as I sit here in my venture capital ivory tower, all these small businesses are simple to automate. Yeah, I can't wait for my tweets at me.
Well, tell me more about that. So as you think through the challenges, like what is most stark, what's most clear as the thing that someone pursuing this would need to solve?
Yeah, I think the biggest one is just understanding that like there's going to be a bunch of human problems when it comes to this. And so you have to be like eyes wide open. You have to be a great operator, and you have to deal with like scaling a human driven business. So I think that's the first one, and like all the implementation problems around that. Right. So there's going to be a bunch of hairy legacy systems. You're going to need to navigate like all the process mining and figuring out like, what do I need to build here to actually drive incremental value. So that's the second piece. It's like human level issues. Once you get through those, then you can start to do the process mapping, which is also exciting. And then the third piece is actually like, I've talked about this a little bit before, but a lot of these legacy services businesses, while they may be bits oriented, like at some point there's like an atom involved. Someone has to like go do the business development. Like it's not like you can just fully automate these companies. But it could be even more complicated. Like imagine you bought like, staying in the insurance example, maybe you bought a third-party administrator, which is someone who deals with like insurance claims. So you could deal with all the back office stuff that around handling an insurance claim, accepting all the documents, figuring out like, what's what. But like AI is not going to drive the truck to the crash, right? Like where is the right combination of bits and atoms, primarily, hopefully bits, and then trying to figure out how to navigate some of these human problems and implementation problems. But it's definitely going to be hairy. And again, I think if you don't do this right and you don't figure out like a very repeatable motion for these, like, again, smaller acquisitions, I think it's going to be really challenging to build a big company. So that's the opportunity here.
What are you looking out for in particular? Is it a certain type of founder? Is it a certain motion that you see someone doing that you think is really intriguing and you think, okay, they're on the right track here? What are you really looking for?
First things first, I'm looking for an entrepreneur or entrepreneurs that like have like bottoms up understanding rather than the tops down understanding. And it's like, what does that mean? It's like, I want to find entrepreneurs that have like earned secrets in these end markets, right? So somebody who has maybe sold to the Steph's insurance agency, or someone who has run Steph's insurance agency, or whatever the corollary is for each one of these markets. It's very hard to come in and like know the shorthand. Like you have to trust me that I'm going to come in and help you bring your business and take your business to the next level if I'm going to be that acquirer. And so I think you need to be like a very special person on that front. The second piece is like an understanding of like, hey, can this industry like be like automated? Is it enough, sufficiently bits oriented to the point where like AI can actually have an impact on
what
that?
percentage?
Right, exactly. And like, is it the right kind of work that is conducive to being automated by AI? That's another piece. And then I think the third piece is like, hopefully there's a very large, fragmented market of acquisition targets such that like you're not, basically going in and having to compete with the larger, mid to large size traditional private equity deals. And so if you can find one of these end markets where there's like, a significant number of mom and pop businesses where you can go and run that like CAC minded playbook of like acquiring and implementing and building a repeatable motion around that. I think there's just like insane room to run and like massive businesses to be built. And so those are like the combination of factors that I'm looking for. The way that I would run it is I would go find a design customer, start building software, and then show yourself and frankly everyone else that you can actually start to move the needle on earnings. And that's when I think you've got the tiger by the tail and it's time to go and run fast.